Hello again, everyone. In this technical analysis of the stock market video, I call it all in because that's exactly what the Federal Reserve is. They are all in. They've cut interest rates to zero. We'll just kind of walk back through that, what happened here in the downdraft and when they did it. And of course, then they announced the major stimulus of $2.3 trillion before the market opened on Thursday, which was the last day of trading here this last week. All right, before we get into that, just want a quick reminder. If you end up liking the video, hit the thumbs up. And if you're not a subscriber to this channel, hit that subscribe button. And if you'd like to have more of this kind of information on a regular basis, head on over to joehenches.net and check out the membership right here. All right, let's take a look at the market. Here's what happened on Thursday. The Dow was up 285.8 points. But it's interesting how the trading range here on Thursday was pretty tight and very narrow. And as I said, the Fed announced this new program of theirs, or expanded program, I guess you might want to say, right before the market opened. And part of which it included, I think for the first time, that they were going to talk about actually buying high risk or high yield debt. Okay, and we'll talk about that further because we're going to take a look at HYG. Now, it's, and then for the week, let's take a look over here. You can see we had a pretty big move to the upside, up over 2,600 points on the Dow, a continuation really of the big move that started 2 weeks, or let me just say 3 weeks ago. Okay, we had the pause the previous week, and then had the big move here, big bullish engulfing type of candle. And then we got the follow through this last week. Now we'll see how far and where we go. Now, last week, when I talked about the S&P 500, I said that either we are here with intermediate wave 2 here, or we would be continuing to push higher in an ABC pattern. I also said that if the price action came down, here's the last 4 days. We only had 4 days of trading this last week. I said if the price action came down and took out this little cluster of trading these 3 days and continued to push down into lower, ideally into this gap, that it was kind of confirmation that this was probably intermediate wave 2. Well, we didn't get any of that. Okay, what did we do? Right out of the chute, we popped up and continued to push higher. So to me, this is reinforcing the ABC pattern that we've got. Now we've retraced a little bit over 50% here on the Dow Industrials. It's the same thing on the SPX. Can we continue to push higher? Absolutely. Yeah, we could continue to push 61.8%. A normal retracement for a wave 2, we're targeting usually 50 to 61.8%. Okay. Now, I've also got this deep retracement up here of 78.6. You got to remember that from an Elliott Wave perspective, when you're thinking about 5 impulsive waves, the second wave back can be pretty sharp and can be pretty deep, and it's a valid wave as long as it doesn't go back and go higher than the beginning of wave 1. So right now, the main thing that we're looking at so far, this is playing according to a classic zigzag type of pullback. But have we seen the price action start to break down yet? No, that's what we're looking for. Okay. Now, where did the Federal Reserve cut? Okay. On March 3rd. So where was March 3rd? March 3rd was right here. They cut interest rates 0.5 point to 1%. Okay. It was their first emergency rate cut since December 2008. And the market basically, okay. And then what happened right in here? This was a Friday, the 13th, and then here's Monday, the 16th. On Sunday, the 15th, the Federal Reserve cut the interest rates 1 full percentage point to 0. Actually, their official statement would say we're cutting it to 0 to 0-0.25%, okay? But for all intents and purposes, they cut it to 0. So here's what happened after that. And the market continued to sell off. So now the Fed has continued to say that we're going to add, more buying of loans, more debt, et cetera, in trying to support the economy, trying to support small companies. And we'll see what kind of push that has. We may continue to push higher as a reaction to that. We'll see. But again, what are we on alert for right now? We're on alert for price breakdown. And so far we haven't seen it, but it's acting according to plan in terms of a deep retracement here. Classic zigzag type pattern for wave 2. Okay. Let's take a quick look at the VIX. Okay, I want to go back over to this view right here. So the VIX closed at 41.67. So the interesting thing is you could say, well, wow, we've pulled back down from like 85, slightly over 85 intraday, all the way down here to 41. Now, let's just think for a minute about when we're above 40 in here. Okay, so the first time that we got above 40 and stayed above 40 was March 6th. Okay, and we're still above 40 in here as of the close on Thursday. So it's really interesting. I went back and looked, when was the last time we had this kind of really, really high readings on the VIX? And it was, 2008 in the financial crisis. The VIX stayed above 40 from October of 2008 all the way until April of 2009. And I'm talking about staying above pretty much continuously. There was 1 or 2 times where it got 2 or 3 days below 40, but then it came back up, but it stayed elevated. So yes, this can stay very, very elevated for quite a period of time. Okay, let's take a look at the high yield bond fund. All right, I'm going to blow this out. So what we're doing is we're looking at this, and I've identified retracement levels here. Okay, so this is the high up here, and you can see this looks like, well, wait a minute, wow, it doesn't look like it was hardly trading. Well, you got to go back and look at it. And when you get into that time frame, you could see, yeah, there was some volatility in there. The problem is, the move that's occurred since then just dwarfs it so much, it makes it look minuscule. Okay, but if what we're doing is I'm measuring from the high and the entire move down, what have we retraced? We've retraced just a little over 78.6%. Big move. Why did we get this jump? We got this jump because of that Fed announcement on Thursday morning, okay, at 8:30 Eastern time. So now, I'm trying to put this in perspective. And so I looked back and thought, okay, when have we seen something in HYG, somewhat similar to this in terms of the price action? And I did see something like this back in 2011. So let's go back and take a look at that. Okay, so here's 2011, and here's the high that occurred on April 29th in HYG, big downdraft that occurred into June 16th, and then we got this pretty strong rally here into July 7th. And where did it go to? 78.6% retracement of the entire move down. Actually, what I want to do is take that off of log so I get it more accurate. There we go. It went right to 78.6%. Okay, so now you could sit back and say, well, Joe, it's not the exact same conditions, et cetera, et cetera. I don't care about that, and it doesn't matter. I am looking for price action patterns, okay? That's what we're looking at. And what was happening back here? What was happening? We were having the government crisis that we were getting into, where the debt of the United States government in June, I think it was July, August of 2011, got downgraded, okay? So, but from the standpoint of what I'm talking about here in terms of the price action, I don't care about that. I'm just looking for the fact that we had huge downdraft in HYJ, a very quick snapback, all the way to 78.6%, and then what happened? It basically rolled over and took out the lows. Okay, so I'm not saying that this is a guarantee that this is going to happen. All I'm saying is, have we had a situation where we got a very dramatic, as a matter of fact, one thing I didn't do, 2, 4, 6, 8, 10, 12, 14, 15 days. Okay, so let's go back. How many days are we? 2, 4, 6, 8, 10, 12, 13 days. Okay, so it's going to be real interesting to see where we go from here. I know what I'm expecting in the market, and we'll see what happens here with HYG. All right, that's it for this video. Again, I hope you felt like you liked the video. I hope you found it helpful. That's the main point here. Give it a thumbs up, And if you're not a subscriber, hit that subscriber button. And again, if you'd like to have more of this kind of information, head over to joehenches.net and check out the membership. We talk about these things every day. All right, everyone, have a great weekend and be safe.